What's happening, guys? I hope everybody had a fantastic weekend. This past week, I was in Arizona, and although it looks like I'm in a basement, it's actually a pretty nice resort. My cousin got married, and we're at the Mountain Shadows Resort. And by the time you're watching this, I'm already flying back, so I wanted to make sure that I got this video out before Sunday. So I'm recording it on Saturday. Today, I met up with a bunch of traders, and we made some pretty good content. As well as took some UTVs out in the desert, which was a ton of fun. I hadn't done that before. So we compiled it all together, and I think we're going to have a pretty good video for you guys, and I do hope you enjoy it. First and foremost, the market continues to melt down. That's obvious. It's been doing it for a couple days now, a couple weeks anyway. And it's just a good reminder that you do not need to find the bottom. It's one of those situations where there's that fear that you're going to miss that bounce, but it's no different than when you're trying to find the top on these small caps and you shouldn't have stepped in front of it and you did it anyway, and then you get squeezed out. It's the same thing in reverse. And when you're trying to find the bottom, and you keep on doing the same thing and expecting different results, you know how that ends. And you know what that is. It's the definition of insanity. So remember, let things do what they're going to do, and then pick up the pieces after. Let everybody else pay for that information. You saw SPRO, for example, on the breakout side. We let it exhaust out over the 315s, however high it went, and then you saw how clean of a trade there was last week, and no difference to the downside. Let it flush out and let it pick back up. And once you start to see higher lows, then you've got a good risk to reward. Even if the trade doesn't work, it's at least you have something to base your risk off of, and you don't have to force the trade trying to find that bottom. And just like we talked about, if you guys watched the Boston video that we did for Traders for a Cause when we walked around the city, we were talking about that the V and the right side of the V, and how sometimes you are trying to find the bottom and you make it through, and it bounces, you end up selling for flat. So you took on all this risk, and then you end up selling for flat when you should actually probably be buying there. And so the difference of just waiting for that turn to come in will allow you to buy with a lot less risk and scale into that winner, while everybody else is just happy to be getting out for flat or minimizing their loss. So think about that in this type of market. That's what it's all about. And remember, you don't need to trade. No trade is a good thing for some of you that aren't seeing an edge in this market. And one thing that I've been repeating over and over is, you don't have to take a trade right out of the gate. And just by waiting that 15, 20, 30 minutes, it will take those blinders off. Because what happens, you get into that one trade, and then you try to force it to work the way that you expected it to work. And then what happens is you miss all these other layups. And those are the ones that are going to take care of you during this time. So it's very important not to put those blinders on right off the open. And I think we've been talking about it a lot, but one of the other things, especially in this market, I'm not busy at 7 a.m. I'm not busy at 8 a.m. I'm off desk. I'm trying to walk more or do whatever, versus trying to figure out a trade to take in the morning. You don't need to. There's so much range right now that just hands off, find the best type of trade for you. Sometimes I'm watching NEO and RIVN and all these other different names, but maybe that price range it's not good for you. Maybe look in the $5 range. Maybe look in the 20, the 30, the 50, whatever you as a trader personally are best at is where your focus should be. And by going through those charts and seeing them, you're going to be able to react that much faster when they start to show up on your scan, or there's a PR, or there's a market move, and you can go right to them and already know, all right, I'm prepared. I've seen this before. I've seen the chart recently, and I'm ready to go. And that time that it takes you to process is going to be a lot faster because you've stayed familiar with those charts. So keep that in mind. First and foremost, before I get into anything more, t-shirt winners for this week was, I'm going to kill this one, I can't even say it, Quixotic, and Mac, MAC. You guys got the t-shirts for this week. So I'm not going to go crazy into scans with visuals. I'll put a chart of each one that I talk about, but I'm not going to do a screen record this week just because I'm just not set up for it. And it's already pretty late here, and I've got a flight in the morning. So I wanted to go ahead and get the video out, and I'm just going to make a few modifications just to make it a little bit easier. One thing that last week, just, it's hindsight, but I always like to kind of refresh people's memories, on the always look left, right? And GSUN went nuts on Friday. It went from like sub 30s, I think, up to 94,999. And if you look at the last run that it had, the high print was 95. So if you went with the always look left kind of thought process, it doesn't mean that it has to top there. It doesn't mean that it's going to top there. But you can make a strong assumption that it's going to have difficulty breaking through that level, or at least will pause. And if it does and it starts to fail to follow through, you can make a generalized assumption that that's a good risk to reward type of trade. And as you can see, it literally was 0.001 less than the prior high last time it ran, and it unwound about 50% from there. So keep that in mind. I always like to refresh your memory on that, because it's a concept that I use over and over and over again, and it works. And even if you don't short it, sometimes it's good to know where it could run up to, just so you know if you're going to step in front of it, how high can it go, before it meets some sort of resistance. And it's just something to think about, especially when you're stepping in front of names. So just to jump forward on the rest of the stuff that I've been watching for the week ahead, NEO has always been great. So, you've got NEO and Rivian. Those have always been great traders. But NEO is something that I'd be watching. If we gap up huge, I'd be watching to either join that trend if it starts to hold versus VWAP, or look for it to kind of blow off in a failed follow through type of setup. Otherwise, some type of gap down, flush, and looking to trade that reversal. Now, keep in mind, I'm not taking a stance one way or the other, right? We don't know if the market's going to gap up, 2 or 3 or 500 points on Monday, or if it's going to gap down again. Ideally, it gaps down, it continues to flush out, and it gives us a really good opportunity to get long on a lot of these bounce trades that are oversold. But it's important for you to just kind of think about which ones make sense for you. Is that an AMD, NVIDIA, Apple? Do you go into a different sector that you're familiar with? Do you look for banks? Do you look for travel names were got smoked last week? But it's all about what are you good at, what levels or what price ranges do you like, and just see the charts and get familiar with them, so that when and if the market does rebound, you're ready for it and you know what you're going to go for. Scan is going to continue to be a little bit different because we're in a market that we haven't seen in a very, very long time. And so I want to focus on all the ones that have the most range and the best liquidity, so that I can get in there, scale in if I'm right, and really let the trade work for me. So NEO is definitely one of the favorites there. Another one that has been a runner lately is Sava, SAVA. They obviously trapped shorts. What was that? Wednesday, Thursday, Friday? I guess Tuesday. Tuesday started it. squeezed out Thursday, and then it just absolutely came in like mad on Friday morning. So it's been a short, long battle for quite some time. Obviously, shorts are getting a little bit twisted. They still probably are twisted, but we should continue to have a nice opportunity to trade this thing. Ideally, we get another dollar or two out of the gate push, and then it starts to sort of unwind from there. So we'll see what happens with that. The other two are ETFs that I'd be familiar, or at least familiarize myself with: UVXY and TZA. Both charts kind of pushing with the market, panic, market pullback. Quite honestly, UVXY, it is moving, but it's not, there's still not a lot of panic in the market. It's just a slow and controlled unwind. So in my opinion, if we start to stabilize Monday or Tuesday, you're going to see this thing sink right back, this UVXY, back under 11 pretty quick. If not, and if we start to stay heavy, I do think we're going to start to, get a lot of panic across some names, and you need to be really, really cautious. So there's no rush to finding the bottom in this market right now, but if and when we do stabilize, UVXY will definitely be a watch for me, as well as TZA. Other than that, on the failed follow-through section, I have LGHL. And again, this does not mean that it has to fail. It's going to fail. For me, in my opinion, it's just a ticking, time bomb. But at some point, they're going to pull the bids. At some point, it's going to be just like IMTE. They're all related: DOGZ, IMTE, CLEU, and LGHL. They've all been kind of promoted by the same, WhatsApp and Telegram type groups. And, one by one, they end up unwinding. So at some point, it will fail, but that doesn't mean it's going to be on our timetable. So that doesn't mean that you step in front of it and you just short it and it has to pull back. But when it does fail, 190s, 185s, 180s, and really when it fails 180s is when I really start to get interested. So keep that in mind, because every time it's pulled back to the 185 range or so, they've soaked it back up. So if it starts to get heavy at 180s, that tells me that something is different. And then AMPX continues to catch my interest. I think that shorts got in there, got a little aggressive. It was a no-brainer short, and then it stays around just enough to squeeze out the rest of the shorts like it did on Friday over the 15s and then pull back. Now I think a lot of people are going to be annoyed of it. They're going to be exhausted of it. They're going to take it off radar. And so for me, I want to see a morning shove. And then I think we can probably look for a $1 or $2 type pullback because most people have given up. The volume probably started to taper off. But for the most part, everybody that was so focused on it got blown out on Friday. And at this point, this is when I start to kind of get interested in it once everybody else has kind of given up. And then Fry, F-R-E-Y. Missed a good trade on Friday. There was a nice trade on Thursday before I left, or Wednesday, rather. And it worked out, but, it didn't really give that huge unwind. It was a nice little channel type trade. The next day, I had that nice gap up, flushed out. And then obviously we had the gap down and unwind with the market on Friday. But I still want to keep that on radar. We've got 30 million shares on that Wednesday. And then, we've traded another probably 15 or 20 million shares since. So if it continues to have trouble at 14, maybe we can get down to that 12 range. I'd keep it on watch. I do think that it could continue to provide a nice opportunity. Other than that, HX I have on the continuation side, as well as EVTL. I'm not really interested in looking to long these things. However, they are the only two names that I saw that kind of were up on Friday that have a chart that could support a move. So something like ATHX, I'd be looking dips if it starts to soak, possible move back up over towards 2. And then EVTL, if it starts to hold at the 8 range and consolidate. If you look at the daily chart, you can see, look left, draw a line at the 9s. You can see that it has trouble there. And if it starts to base at 8 and starts to kind of form a new trend, and it does break through that 9, I think we can get a nice launch. But just keep in mind, sometimes you get that nice launch and then it sits right back. So just be careful getting too aggressive, thinking that, all right, we're going to break out and we're going to the moon now. Sometimes you just get that huge chart break. The cover comes in, the exhaustion move comes, and then, it starts to trickle down and actually unwind, even though the chart looks, quite amazing. So that's about it. Again, a short scan tonight. I'm not going over a lot just because I'm not really set up for it. I don't really think that this market really needs a ton of prep. It's just about, again, staying familiar with names that you like and just being ready for, the time that we do rebound. I would be cautious getting too aggressive both on the short side and the long side because, as you guys know, once we turn, things go fast. I don't think that we're going anywhere in the next 12 to 18 months. I've said this for quite some time. I do think we're going to be stuck in a channel for the next 12 to 18 months basically. And do we go a lot lower? Not sure. I think we go a little bit lower, and I think we can bounce back up to, maybe not as high as we were, but I do think we're going to continue to test back and forth, but just not make up any ground in the next, basically 2 years. So we'll see. I'll be back in the room on Monday, and we do have something special for members on Tuesday. Kim, who is Wall Street Coach, we have her coming in for members. She's going to put on a webinar, which is going to be great. Every time that I've talked to her, it's been a lot of fun. I've learned a lot about not only myself, but others, just kind of how people think, and it kind of makes you kind of review the way in which you treat trading, you treat, life, your balance, etc. And I think everybody's going to like it. So keep an eye out for that. I'll put the information in the room. And other than that, we've got Vegas this week. So on Thursday, flying out to Vegas, and looking forward to meet a lot of you guys. So remember, virtual tickets are still available, so we will also include a link for that. But other than that, we'll see you in the room on Monday, and have a good rest of the weekend.